on a video about that investing class. Hopefully you guys can check it out. But I also am starting to just freestyle, I guess, and tell you maybe what I'm looking at in the markets, and hopefully start a little community here and hearing back like some other channels I've seen. So with that being said, I wanted to point to a fact that in my previous video, one of them, I was talking about Stanley Druckenmiller and how he alluded to the wealth effect in Europe, specifically Germany, and then China, right? Those stock markets have been on a fall in bear markets since January of 2017. And then several months later, you can start to see that effect. People spending less, producers producing less, so companies buying less from suppliers. And I thought it was very important because I hadn't thought of that originally. But yeah, I mean, it makes sense that these companies are starting to buy less from suppliers because they're starting to see less demand from their customers, because those customers are starting to feel more poor because their stocks, all their assets are falling. So the wealth effect, again, it makes you feel, the theory goes, it makes you feel that when your stocks, when your house price, when the value of your assets fall, then you feel more poor, and then you don't spend as much. As compared to when stocks rise and we're in a bull market, people spend more and the economy as a result does better. So now we may be at a turning point. I don't really know. I don't like to put calls out there as to when the market's going to turn, or I'm not a market timer by any means. And at the end of the day, this is just education, in my opinion. So do your own homework. But the fact of the matter is, reading this Wall Street Journal article, I was kind of surprised when the head of Citigroup was talking about the wealth effect. I don't have the quote directly in front of me, but more or less what he was talking about is that this could be one of the first recessions that we will talk ourselves into, right? Everybody's talking about a recession, but he's not seeing a recession in his business. He's seeing good business metrics. All the banks have been starting to report. JP Morgan didn't report that bad. They missed analyst expectations, but they did pretty well. Bank of America and Goldman Sachs reported today, and they crushed it. They were up about 7% today sometime. I don't know what they finished at, but it was a good day for the banks. Now, going back to the article, this CEO of, his name is Michael Corbat of Citigroup, he says, "We clearly see a disconnect between what we see in our business on an anecdotal basis and what the markets are saying. Right now, we see the biggest risk in the global economy is one of talking ourselves into the next recession, as opposed to the underlying fundamentals taking us there." When I read that quote, I said, that's the wealth effect. Okay, we're not in a recession, but people may not spend more because they've seen their stock prices fall off 20%. We've seen it in China. We've seen it in Germany. And if that hits us, then that could, happen. And that could happen here. That's something I'm looking for. Consumer spending, you want to watch that, see if it's going to fall back. Look at all these earnings coming out. Banks did well, sure. But what about retailers? Macy's just came out and kind of said, we're not going to meet, maybe even lower than expectations. So watch out for that. Watch out for retailers, consumer spending, all these metrics, and hopefully we can, keep going on in this bull market. If not, just be prepared for anything, because history tends to not repeat itself, but rhyme. All right, thanks, guys.